the European Leaders Summit scheduled for later this week, and a banking union seems to top that agenda. EU officials believe that the creation of a banking union will help the EU resolve the banking crisis, which has had a negative outcome on the Spanish and Italian economies. EU leaders propose to set up a single European banking supervisor as well as a single bank resolution fund to boost banking integrity. European leaders are also expected to discuss closer fiscal integration and the possibility of a debt redemption fund. The EU summit takes place on the 28th and 29th of June. Now, all talk and no result. That was the outcome as leaders of the Big Four in the Eurozone met over the weekend. Try as they might, the countries could not find much common ground on issuing joint Eurobonds, but the leaders did agree on another financial package of 130 billion euros to promote growth. And reporter at Reuters has more on that story.
So far, the Eurozone crisis has proved a political football no one leader can handle. Finding a little common ground was the goal as leaders of the Eurozone's four biggest economies met in Rome. The main message from the leaders of Germany, France, Italy and Spain, a European Union financial package worth 130 billion euros to promote growth as an answer to austerity.
A number was given. 1% of European GDP could be mobilized with a timescale which matched as much as possible the mechanisms we have so that we could mobilize these funds as fast as possible.
Hollande made positive noises about a financial transaction tax Germany would like to see across the European Union. Although Germany has changed course on that and will now focus on having the levy introduced by a small core of countries.
Wir tun alles, den Euro als unsere Währung.
We're doing everything we can to fight for the euro, which is our currency and which we all benefit from, and to make it ready for the future, just as it was a stable euro over the last 10 years. To do this, we need to overcome some problems. Some things have already been achieved. The countries have carried out lots of reforms. Above all, we've developed instruments of stability and solidarity together.
Genauso wie Instrumente der Solidarität.
Germany is resisting pressure for less strict Eurozone fiscal policies or moves to issue common Eurozone bonds. They're favoured by Italy and Spain, who've seen their borrowing costs rocket to levels considered unsustainable in the long term. Getting Germany to change its view on this won't be easy. But if the leaders needed any reminder of how unpopular the current direction is, they only needed to look outside. A strike by Italian unions over austerity crippled public transport, leading to long queues for too few taxis. The pressure's increasing on European leaders to put a definitive end to the crisis. The four said they'd laid good groundwork for a summit of all EU leaders next week. Andrew Potter, Reuters.
All right, again, a better understanding of what's playing out across Europe. We've got Dominic Johnson, who is CEO of Somerset Capital, joining us on the show from London. Now, Dominic, to begin with, prime ministers of the four largest countries in the euro area met last week and have come up with a spending plan to get growth back on track. But are the markets convinced about their commitment to get Europe back on its feet?
Well, what have the markets done since they announced the spending plan? I think they've been all over the place. Personally, I have very little faith in the European leaders' ability to actually come up with any concrete plans. When they talk about spending plans, I'm not sure where that money comes from. Their first priority has got to be a coordinated response to A, the banking crisis, and B, the fiscal crisis in the European countries. So any promises for spending are completely irrelevant, largely. This is slightly separate to what's been going on in the UK, where the Chancellor Exchequer has announced more positive ways to try and ease lending. So he's not embarked on some great big unfulfillable spending promise, but he has tried to ease the credit facilities in the UK, and that is positive. How that's actually implemented, though, is much more complicated and will be harder to define. But as far as me heaving a great sigh of relief because France, Germany and Italy say they're going to spend more money, if anything, it makes me more concerned that they haven't got a grip on reality.
Now, Dominic, what are you expecting from the EU summit on Thursday? Can we expect more walk than talk?
More walk than talk is a great line. I always feel a bit depressed watching them when they actually are walking into the conference, because they all sort of scuttle in and make these great promises that are then not fulfilled. The biggest problem with European summits is expectations. You really have to manage them down. What I would like to see at the end of it is honesty about the fiscal situation. I would like to see Germany stepping forward and accepting responsibility for the European project. And ultimately, I'd like to see a concrete plan for either some type of common banking, pooled banking oversight or banking underwriting of the liabilities, or an effort to really get to the grips of the fiscal crisis we see in the European Union. Are we likely to see that? I think probably not, and that's going to be very disappointing for the markets. We may see some type of broad commitment for banking oversight, but that's just another regulator as far as I can see. If we get any more than that, it will be extremely positive. But I'm not very optimistic, because historically they have always failed to deliver.
Now, Dominic, one of the key areas that the summit is going to focus on is the creation of a banking union. But how easy is it going to be to break the link between bad banks and indebted governments?
Well, if at the end of the summit we do see concrete plans for a true banking union, then I would find that an extremely optimistic sign, if you believe that a common European banking union is a good thing in the first place. Certainly you have to have someone to stand behind European banks across the whole continent, and so far we have no one really willing to do that. I don't think we're going to see that, though. All the signs out of Germany are that they're not willing ultimately to underwrite banks of other countries unless they can have control over them in the true sense, and I don't really see other countries allowing Germany, or whichever accredited nation they're going to have to turn to, allowing them to have real control over their banking system. So I think we may see some type of supervisor or regulator, but I don't really see the true pooling of credit and debt that you need to see if you're going to get through this problem. So I'm not very optimistic about that. Ultimately, it still remains a huge problem. This is both a banking crisis and a fiscal crisis. Normally you just have one or the other. Both need to be tackled head on. First the banking, secondly fiscal, and really we need to see it in that order. And I'm hopeful that we may have a discussion, but as I said before, I'm not particularly optimistic.
Now, Dominic, Greece seems to be off the radar of the markets, at least for now, after a positive elections outcome. But how soon do you think before it goes back to being a headache for the markets?
Well, you very kindly invited me to comment on Greece in the past, and I'm pleased to say I've been pessimistic and accurate. The Greece situation is by no means solved. We've just become fatigued with the issues in Greece. Certainly I thought the election last Sunday of a more moderate, mainstream type socialist government was extremely positive, and they're obviously going to do what they can to try and negotiate a better settlement for Greece and b some type of long-term sustainable plan. Both of those are actually going to be a lot more difficult than they look. So I think it's off the agenda for the moment. We're hoping that the European Union can come up with more bold plans for either, as you've mentioned, a banking union or some type of fiscal organisation at the very least. I'm not particularly optimistic about that, as a result of which the Greek situation still remains extremely problematic. What worries me is that now I think a large majority of people have accepted that Greece cannot possibly sustain its debt, and that must be linked to an exit of Greece from the euro, which makes for a very destabilising future, regardless of whether we are fatigued or not. The problem remains, the patient is still very sick, and I haven't really seen anything concrete that makes me change my mind about the future viability of Greece, either as a nation which is solvent or as a meaningful part of the European Union.
Now, Dominic, also the European Central Bank has started accepting lower quality collateral in its lending operations. Is this simply indicative of the situation across the euro area only getting worse in days to come?
There's no question that the European Central Bank has to lower the quality of collateral it's willing to take, because the overall quality is so low in the first place. The only way they can legitimately, or even at the broadest fringes of legitimacy, sustain the banking system is by effectively lending against anything. You're swapping poor for quality. That's the great sort of confidence trick that's going on at the moment. It's important because ultimately it means these European banks can have some access to liquidity, and I think what the European Central Bank has done is actually very valuable in giving us the breathing space to work out how on earth we're going to deal with the debt books of many of these European organisations. The next stage, though, is physical. It's real. It's going to involve write-downs. It's going to involve losses. It's going to involve cheques being written from people who have money, mostly in Germany, to people who don't, mostly in the Mediterranean nations. And that's got to either go through the governments or through the banks. So it's not just a question of swapping quality of assets. It's also a question of fundamentally trying to deal with the situation at hand. So good news, yes, what the ECB has done. I totally applaud them for that. It's extremely important not to be hidebound. But following on from that, it's up to the politicians to now try and actually get to the root of these problems. And that's actually what concerns me the most.